Trading is all about experience. It's to feel the adrenaline running through our veins. Like all the things we do that excite us. Whatever world we come from or live in, there are people that are born to succeed. They're called special, to hustle every day for an opportunity of a lifetime. Looking for the challenge to shape our future is something that's in our DNA. A privilege just available for a few. Traders, we see things differently, paying attention to every small detail that would maybe go unnoticed by the common eye. On or by the edge is our playground, with a constant strive for glory, seeking for a new tomorrow. Do you feel special? Take back control of your investments.
One, two, 1, 2. Joe Malone Jr., how you doing, brother?
Doing good this morning.
Good morning.
Top of the day, Thomas.
Top of the day. Seeing a bald man
For me.
live. Wow. Good to have you, brother. Did you
Thank
attend
you.
the morning briefing?
No, I didn't, but I had a recording.
Awesome, awesome. How did you like it?
It's great, very informative. It's exactly why I signed up. So,
Loads of information, new information, I hope.
yes, it is. It is. I'm getting used to it now, but I'll be catching along a lot more.
Yeah, it takes time. I mean, the market was here 10 years ago. It will be here for another 10 years, or hundreds of years. So, no rush. Get into the habit, you know, how we operate. I trade mostly news. As you may know, because that's where we
Yes.
have the highest hits, the number of hits accurately. Let's see how many people we have.
Hi Thomas, how are you?
Asal, how you doing, sister?
Good, thank you. Thank you.
Okay, there's not many people turned up in the Zoom. There's only like 30 people. Cheeky fuckers.
Hello.
Andre,
Hi.
where you from, brother?
I'm from Romania, but I'm living in Norway.
Ah, ce faci, mafia?
Bine.
Hello, Thomas.
Hello, Ersan. So many people asking, what happened to Japanese yen yesterday? Oh boy. So, two answers. An official one and an unofficial one. The official answer by the Bank of Japan is that they can't confirm whether they stealth intervened in the FX market. Well, you know, we're not stupid. So basically, coincidentally, the same level where the sell-off happened exactly a year ago at this price level at 150, it went up to 150, almost 152. So there was a bit of more room a year ago, but this year, so 300 and something days later, exactly the same price level, we had a almost 300 pip drop. The sun is going crazy. It wasn't a big intervention. Officially, the Bank of Japan says they can't confirm whether they intervened, but most likely they did intervene. Or the other thing is that could be that the market reacted this way. There was something about the options. I'm not an options expert, but coincidentally, the same price level we had a reaction where we had a year ago this massive sell-off, and it was a continuation or a series of interventions. You can see every single drop was like 4, 5, even 800 pips. That is massive. And this one yesterday was a minuscule, but you know, it pulled down many trousers. I call this level the Widowmaker. So many traders got stopped out last year at this price level, because as the US was raising interest rate back to 5%, obviously the dollar strengthened. And it strengthened so much that you can see that against the Japanese yen, it reached levels which hasn't seen ever. $150 yen per dollar. So I call it a Widowmaker price level. We don't know whether Bank of Japan intervened officially, but I think they did intervene. And also there was some scare. Traders got scared because the same price level appeared, so they just took profit after the price crawled back to that price level. So it's not clear cut what happened, but it's something to do with Bank of Japan, obviously. But we don't know, was it fair or was it really a stealth intervention? But long story short, we can expect bigger moves to the downside. There could be a retest back to this zone, so two ways to trade it. The first one, if you enter into a very small lot and you take profit at around the 140 price level, so it's over 1,000 pips, and you be happy with a smaller lot, smaller profit, or you start, going heavy, but then you have to jeopardize of a stop loss hit, because you can see back in 2022 this zone was actually 200-300 pip this week right here. Would I risk a bigger position? No, absolutely no. Absolutely no. Maybe a smaller lot. That's what happened with UJ. Today is another day, another set of data. Who knows what data do we have today? ADP non-farm employment, in it.
Yes.
That seems inherent, it ain't always so apparent. Dangle carrot, you ain't always gonna get it. But don't worry, it's a pretty February, in a year with more to carry, and more days is yet to come. Under the sun, taking the ferry to the city, with moments extra pretty, like the people, like the idea that I keep inside my brain that isn't equal.
Bankai,
Thomas,
Tom.
are you in any position right now, or?
I am. Let me just show you my positions. The same sells since yesterday, but I got one stopped out in break even, a 2 lot, and I just have 2 runners, so you shouldn't take it as a sell sign, because I think price is going to climb a little higher. I have these runners, but it's not major positions.
Cool.
The reason why I would not enter into any position just yet, because we have ADP non-farm employment coming up, so we need to analyze it in it. ADP non-farm employment is said by many analysts. It's a good forecast for NFP, which is on Friday, the coming Friday. There's only 2. Wow, there's only 40 likes on YouTube. I don't think I'm able to analyze the market with this many likes. So let's just finish my coffee.
ये तो वैसे आ जाता है, ऐड ही बहुत आती है।
Oh, this guy just freaks me out. Fucking hell. It's like a criminal mastermind.
Hi sir, good afternoon.
Hello, Muhammad. Salam alaikum, brother. Hello, Muhammad. Salam alaikum, brother.
Walaikum salam sir.
Look at this expert analysis. No one knows when this is going to stop, said Chris Turner, global head of markets at ING, which is a pretty big bank. It feels like something is going to snap, but I'm not quite sure what. Hey boy. Investors expect US rates to continue to grind higher as investors require premium for owning long-term bonds in addition for expectations for the Federal Reserve rate. It's called a risk premium, by the way. You can see that, yes, yields are climbing higher. It's almost 5.2%. You haven't seen these levels for 17 years. It's crazy high.
That's a long time.
Yeah, but yet gold is climbing higher. So we have buying pressure as well. Elitman says that he's sure that yields are going to go higher. Yes, they could go higher, but there is actually a ceiling because we have a benchmark which is laid out in the summary of economic projections by FOMC, and we are very, very close to the target rate, which is around between 550 575. So the only reason when it could go higher than that if we have some really inflationary data, and not just one, a series of inflationary data. So we have to be careful because, you know, there is a ceiling to how high yields can go at the current market conditions. It's strange that gold is going up, yields started to retrace a little bit, but, you know, still gravitating above the year-to-date high. Skunkai asking 1829 good level for sell. No, just wait, brother. It's a good level, but you know, wait for the data. We're going to analyze everything once we hit 200 likes. Until that, I'm just gonna chill.
Well, Thomas, I was like 57.
Bram, how you doing, brother?
I did well till this morning. And I gave all my profits back.
Did you notice that we keep having this conversation month by month?
Yeah. Yeah, and
every single month.
And when I listened to the briefing, I hear you saying, "Oh, I'm staying out." And well, if I just listened to the briefing live, I would have known that. So, oh well.
Well, lick your wounds, chin up,
yeah,
grind forward.
It was still a good month last September, so.
Yeah, it's. I was expecting a shittier month.
Yeah.
But September.
Yeah.
Was a good selling, and October supposed to be good for the markets, but ain't looking like it's gonna go up. But we still have the earnings season left.
That's good.
Q3 earnings reports just gonna come out starting next week. Alright, this is actually a very good article which talks about not just the drama around the yields, and most of the articles they state that yes, yields reached a level which we haven't seen for 16-17 years, but this one is actually goes into more details about the potential reasons, and not just the fear of inflation and the fear of higher rates and the economic slowdown. It goes into more details of the risk of recession, the fear, credit default swaps, which is a derivative contract, which it's an insurance against default, and also it talks about the worries over large spending plans and borrowing requirements in the US are also pushing yields higher. So it's a good article, well written. Who's the journalist? Mary McDougall. Yeah. Shiny Gaming says, tell us gold selling area. How do you know it's a sell? Data hasn't even been out. Just wait. When the market is going up, stop looking for sells, mate. Clearly, even if you just look at the technicals, look at this breakout from this channel, and that's only technical, which everyone understands. But fundamentally speaking, yes, I'm favoring sells, but when the market is going up, just don't start selling like crazy. Wait and observe. Ricochet Degungar, hey Tamas, any pre-running trade? No, nothing, brother, nothing, brother. We're going to analyze ADP once we hit 200 likes, but until that, I'm not gonna move a finger. Just gonna read. How can I make this news disappear? This guy is freaking me out. Simon MC, welcome brother. Could the Q3 earnings season be the reason for the fall in US 30 and the directing companies ETC cannot buy back their own stock a month prior to results? Buybacks inflates share price level. Yes, it's very true that the I don't know what is the actual name for these people, but those systemically important, not systemically important, but decision makers, they are banned prior to earnings release. I think a month, or month is probably correct. They cannot buy or sell anything, so they have to do it before, because that would consist of insider trading. Could this be the reason for the fall? I think it's more to do with China and the general fear that the economy is heading into bigger problems than we thought. Therefore, because there is a rebuy action recently, prices fall. Just asking, maybe just another variable. It is possible. It's hard to tell. We'll see. But I think it's more complex than this, but definitely this is a variable which could have a knock-on effect on the markets. Now, October is often called Uptober because the stock market should go higher because of the earnings season, which, you know, is very much possible, but we need to see the earnings first. Because right now, I think the China story and the general fear of persistently high rates. Remember that interest rates have been high for over a year, 18 months. And this starts to boil down or ripple down in the economy, hurting companies. Also, the dollar is so freaking strong that any company which has overseas operations, if they want to repatriate or bring home the money, the profits, they need to exchange the profits in euros, the profits in foreign currencies, they need to exchange it to dollar. So when they change it back, they actually lose out a lot of money. And the dollar year to date is, I think it's about 20% strengthening. So that's 20% loss on any profits they make, which is pretty huge. Okay, we can start analyzing the market slowly. Alright, gold is nicely pushing higher. So this is not the price level, or this is not the kind of market condition where I would look for sells. It's I know it's not odd that gold is going up because yield started to retrace back into the year-to-date high zone. So this is the dead zone, which we don't want to get stuck. It can bounce back easily, or it can melt through. So we need to be patient. We need to see the signs, the crumbs, the confirmations before we enter into a sell. So what we do, or how I trade, welcome everyone, is always start with the macroeconomics. And the macroeconomics is first. If you start reading as many financial news as possible, Financial Times, Bloomberg, all of these reliable things. Market sentiment wise, the market is definitely scared right now. Money is scared away from markets because rising yields. You can see that yields are unstoppable, massaging 5.2%, almost 5.2%, and every single yield is going up. Interestingly, the long end of the yield curve, which is the 10-year treasury, has outpaced the short end. You can see that the steepness is very, very different. They're about to cross, not soon, but they're very close to each other. So meaning that the yield curve, if you look at the yield curve, then the inversion should normalize because the long end is rising much faster than the short end. That means if I go to the yield curves, in the US we should see exactly, you can see that the yield curve is coming back to zero. So the fears of recession is actually started to fade away. You can see in this chart that this is the zero price level, and when the yield curve is below the zero, that is a sign of a recession. But recently the yield curve started to normalize because the long end of the yield, so the 10-year minus the 2-year, moved so much faster. But anyway, it's not relevant for you guys. It's a more in-depth analysis. So macro perspective is yields are rising, but the market is scared, which is a interesting mixture. If you look at the fundamental parts, we have ADP non-farm employment today, which is said to be, by analysts and economists, that ADP non-farm employment is a good forecaster for non-farm payrolls. So I would not enter into any position just yet. Let's wait for a second. Let's have a look what is the forecast first. So non-farm employment, ADP, which is a private company, it's not prepared by the Bureau of Labor Statistics. It's a privately sourced statistics. It's said to be forecasted 153k versus 177, which is significantly less than the previous one. What kind of other job market data we had this week, yesterday?
JOLTS.
JOLTS. What was the result of JOLTS?
Inflationary.
It was more.
It was more. Does it look like a weak job market?
No, it's still strong.
Yes.
No.
Still strong.
No.
So if the job market is strong, meaning that it's able to suck up unemployment, because for every unemployed person in the US there are 2 jobs available. Let's not go into demographics and the disparities between different states, but generally speaking, for every unemployed person there are 2 jobs, 1.9 jobs in the United States. So the job market is strong. It has the power to suck up all the excess supply of labor. That's a job market. Now we have the non-farm employment, which is also job market, is said to be, ADP is forecasting a weaker employment number. Does it correlate with the JOLTS number?
Nope.
No, it's not.
No.
The last 1, 2, 3, 4, 5 times, there was only one time when the job market in August printed a lower than forecast. Middle of summer. The rest was always almost double. I mean, look at these. Look at these numbers. Like 190, 324, 228, almost 500. 170, 100k more. 148, double. So does it look like a weak job market to you? No.
No.
Thomas,
The last-
if you see the last initial job claims, it's all inflationary too.
What was the last jobless claims? Initial. It's right here. The last initial jobless claim was worse than expected. So that means less people went into first-time unemployment, meaning that they have found a job.
Yeah.
Continuing jobless claim also lower than the forecast, which means that people who were in unemployment, they returned to the job market, or the claimant count, or the claiming of unemployment benefits ended because they reached, I don't know how many months they get the unemployment benefit. So thank you, Sergio. This is a very good point. But Sergio, does it look like a weak job market?
No, it's strong.
No, it is a strong job market. Because what I said, for every unemployed person, there are actually 2 jobs available in the US. Okay, we started to see some weakness. Fuck it. Should we enter into a sell? I really want to front run. Because I feel that based on the things that we just discussed, the JOLTS job number, the initial jobless claims, and the health of the US economy, I think ADP is going to be, and also the previous ADP numbers, I think it's going to be a higher number, which is going to be inflationary, and therefore I think gold is going to go lower. So for this reason, I'm going to front run, but only with 2 lots. This way, I can use a wider stop loss, and my risk is still below 0.5%.
Morning, Thomas.
Morning, Ricardo. But if you want to be 100% sure, you have to wait for the data, guys. So everything we just discussed now about JOLTS job openings, which was a big surprise. We discussed initial jobless claims brought up by Sergio. We discussed previous ADP numbers. Everything is pointing into the direction, and here is the JOLTS number. Everything is pointing to the direction that ADP is heavily under forecasted. I think the number is going to be greater. And that's the reason why I believe the market is going to go down. The gold market is going to go down. We might have a bit more push up because, you know, we have a massive wick right here. And that could be probability it's going to edge a little bit higher, but that is the reason why not entering with any heavy lots. We have 14 minutes. Who has any open position?
I'm waiting for the data today.
Wise.
Nothing yet.
Actually, I'm going to move the stop loss out of this zone because we have the wick on the left hand side, and this is why it's important. I'm not entering with heavy lots. You do whatever you want, but better safe than sorry. My sell level plays at 1829, Thomas, sir. Wonderful, brother, wonderful. Actually, Chi Cox is asking if the data is higher than the forecast, so where is potentially TP target, sir? It's up to you guys. I mean, there are multiple take profit opportunities. It's difficult to say because we are all different. Some of you are scalping, so it would be crazy to tell that 1816 because scalpers are happy with 10-20 pips. It's down to you, depending on your style, but first take profit is always the previous consolidation, previous low, previous high at 1821, and then go zone by zone. Simple as that. And ask your bank account, should I take profit? After years of suffering. Those who would like to join the Alpha community and trade with me on a daily basis, I'm posting the link into the YouTube chat. If you have any questions, visit the website. Abdul Khalil Salik, how long did you trading? $11 years now, since I placed my first trade. 11? Yeah, 11 years. 10 or 11. So, quickly, we have 5-6 minutes left. Welcome everyone to the stream. Today is ADP non-farm employment, which is a privately sourced job market data, but it's a good representation of the sample population. 400,000 companies are surveyed. It can go off from the reality, as we saw many times in the past, but also it's still OC, I would if I knew you're not a demo lord. No, it's not a demo account. It says live, brother. Have a look. Have a look. So today is ADP non-farm employment, which is said by many analysts and forecasters and traders that it's a good forecast for non-farm employment, which is coming up this Friday. The forecast is set to be 150k versus 177, but looking at the strength of the labor market, the job market in the US, not the labor market, the job market, JOLTS yesterday printed a massive upward surprise, meaning there's many jobs been created. If you look at the jobless claims last week, very strong. Again, lower than expected number, meaning that the job market is able to suck up the excess supply of labor in the market, because for every single unemployed person there are 2 jobs available in the United States. Of course not proportionately spread evenly in the US. So that is the reason why I'm front running ADP. Of course, there is a risk of front running because we have a sell zone at 1829, 1830. So the market could easily spike back up and then sell from there. It could be a buy and use, sell the fact type of scenario. So the safest option for those of you risk-averse traders is to wait for the data. I think the number is going to be higher than expected. First, look at the previous numbers. ADP is notoriously misforecasted, the same as NFP. 2 minutes. If you see the data coming out before me, or if you see any data, just shout it out, because sometimes investing.com is just ridiculously slow. For this time, I'm going to fire up I'm going to fire up the calendar. In 1 minute, ladies and gentlemen. So if ADP comes out higher than expected, that's inflationary, that's going to push down gold. If ADP comes out lower than expected, that signals a cooling, contracting job market. That is going to be super bullish for gold. That's my view. We have 30 seconds to go. Right on. $20 seconds to go. 15. 8, 7, 6, 5, 4, 3, 2, 1, and the ADP number is
slower
than
than
a big
the
surprise. Yep, close down the cells, close down everything, going out of the position now. Just going to closing down everything. Gold is going to push back up, going to fire up MetaTrader. That is a big buy. It's a very, very big surprise. Let's have a look on quickly. 89, fucking hell, that's unexpected. So gold is a buy, most likely it's going to go up. I'm not entering into a buy because I was looking for sell, and we have the sell zone right here, so I'm not trading anything now, because is one data going to be enough to rail out this bearish market? We'll see. For me, this is a no trade. I was waiting for a bigger number, but it's actually halved. It's a downward surprise. Very shocking. So for me, it's a no trade, guys. Technically speaking, fundamentally speaking, it should help gold to revisit 1840, but I'm not entering in this bearish market to any buy.
Hey, Tomas.
Hello.
What would you think about it? Because winter is starting to set in. Would that have anything to do with the labor market or the non-farm jobs?
So ask again, sorry.
Yeah, I mean, when you look at the weather overall with the U.S., it's starting to go down, obviously towards winter. So your non-farm or your farm jobs obviously are going to basically cut off because harvest season is just about over.
Mm-hmm.
But how do you feel that would affect the other jobs, or should it affect them?
Well, this is non-farm, so it's the farming industry is not calculated. But I'm not sure if I catch your question correctly. Don? Don?
Yes.
Sorry, I was distracted by looking at the chart. Can you just ask again?
Okay, sorry. What it is during the fall, a lot of times companies will lay people off, or the bad weather will change over, and then a lot of the companies will rehire a bunch of people in the spring. Obviously, we have like the Christmas season, the Thanksgiving season coming up, where a lot of temporary help comes in. But has that got anything to do with what we're looking at here, or how do you feel about it?
Well, this excludes the farming industry, so this is service-based, pretty much. So it has nothing. It shouldn't have anything to do with weather. But on the holiday industry and leisure, maybe. But I don't know. You have to look into the data that what contributed to this very low job creation number. It could be that employers are more cautious because the economy, interest rates are 17 years high. Inflation is 50-year high, was 50-year high. So it could do with this kind of fear and preparation and caution that they freezing the hiring. One explanation to that. And looking at the market, I'm so glad that I didn't buy, even though ADP was half of the forecast, because you can see that the market sentiment is actually still bearish. So I'm glad I didn't enter into a buy, and I'm still convinced that a sell might going to continue. Looking at the chart, you can see that how nicely market reacted to this sell zone at 1830, but there's no guarantees. So for me, it's too risky to enter into any trades right now, because on one hand the data tells me that it's a buy, but on the other hand my analysis, my forecast, the JOLTS number, the jobless claims number tells me a different side of the story. And ADP is a privately sourced database, so I think this has been misforecasted, and for that reason I'm going to jump back into a small sell, but only 2 lots, and I have wide enough stop loss to survive. So please, if you following me, don't use any heavy lots. It's not the day, but I think the market is gonna go down.
They'll probably correct that number. There's a big 1 missing in front.
Yeah, it could be.
I thought I'd just say it. I thought I'd just put it out there because I swear, honestly. Remember last time when they were completely wrong? So it's such a big difference as well.
It is massive difference. I don't believe that this is correct. But this is the trap of ADP sometimes, because it's a privately sourced data and survey of 400,000 companies. It can go very, very off sometimes, because it is a strong enough data to represent the whole population, but it's still a sample population. So I think the market, you can see the reaction of the market, which was yes, there was a buy the news. ADP was much lower than expected, but what is the fact? Many people forget to focus beyond the number, and the fact is that the previous numbers of jobless claims and JOLTS and NFP and everything was still too strong. So one ADP could not make a difference in terms of gold prices. And still people asking where to take profit. Ask your bank account, mate. If you're happy what you see on profits, if it's in profit, because mine is in 90 pounds drawdown. Just take profit wherever you want.
Yield looks like pushing down.
Albert,
How are you
welcome,
doing?
brother. Yeah, yields on the top right corner. You can see it's coming back into the consolidation area, which is not good. Not good news. But we still have
I think
New
services
York open.
PI is gonna give us the right direction for the
Yeah.
rest of the week. I think services, we know it's a really important sector in the economy, in the American economy, and in theory it's still expanding, and that could be an important news release, because if we get close to contracting economy, then maybe means that rates are starts to work, and in the other side, if it's keep below above 50, then the
Yeah.
economy is just expanding. I mean, I don't like to take ADP because always there is a surprise on
Yeah,
ADP.
is. I think this ADP was incorrect, but to the other side, because I was expecting a much greater number. And Albert is correct that the ISM non-manufacturing PMI, which is coming up in an hour and 30 minutes, is going to move the markets. So I'm not going to wait for New York Open or ADP, but I can analyze it for you. Would you like me to do that?
Yes, please.
Okay.
Yes.
Sell position is still valid in my opinion. Later we're going to have ISM non-manufacturing PMI. The forecast is set to be lower than the previous one, but it's still showing an expanding economy. Anything above 50 is expanding. That means it's still inflationary. So if, and here's the analysis coming, guys, don't blink, otherwise you're going to miss it. If we have same as the ADP, if you have lower PMI, gold is going to push higher. If you have a higher PMI, gold is going to go lower, but it has to be significantly higher, lower. That's it. Here's your full analysis, guys. If you see a higher PMI number, sell the shit out of this gold. If you see a lower PMI number, not financial advice, but buy gold. I think there's going to be another retest coming up soon. You can see that the market isn't eating. Traders isn't convinced that the economy is this weak, as the ADP suggests, with 89,000 jobs being created. Come on. Or jobs being taken up. That's bullshit. We're not going to believe that. So ADP is off. Hence, there was a buy the news and sell the fact type of scenario. Fixed income market, yields hasn't dropped significantly. We're still, just 5. It was 5 basis points that actually dropped the yields. So even the fixed income market is pricing in a strong labor market, a strong economy, and lower gold prices. So let's have another final look on the live position. It's running in a whopping 18 pips of profit. Any questions?
Thomas,
yes.
If you can see the data of ADP in 6th of July, and after this you see payroll in 18th of July, you can see how this guy can wrong sometimes so hard.
Say it again.
6th of July.
6th of July, yeah?
Yeah. And see payroll in 8th of July.
8th of July last year.
No,
There's only
this year, ADP in day 6 and payroll day 8, 2 days after, to compare these dates.
Oh, there was a massive surprise on NFP, right?
Yes, can see.
What was the 8th of July NFP?
I think we get really nice codes there. I remember we were in the new street. You know, we were running the market and we got a nice stop loss.
Yes, I remember that day. So, what was the NFP on 8th of July?
Sorry, one moment. 8th of July.
Vamos, Sergio.
Because
Rápido.
on 7th of July, NFP was lower than expected. It was
2009. 2009.
So that was lower than the forecast?
So
Yeah.
much.
And,
So much
and
lower.
lower than the previous month.
Mm. Anyway, that's for you guys to worry about. I'm gonna call it today. I'm gonna hold into this position. Do you have any question about the analysis for the ISM later, the PMI?
No, no questions. Thank you.
Alright,
I'm not
guys.
on my computer. What data just was released?
ADP.
Okay.
Came out
Did it come out
ridiculously
inflationary?
low. No,
Oh.
it came out very
Oh.
deflationary.
Oh,
but
okay.
look at the market. Yields hasn't dropped that much. The market and gold did bump up a little bit, but this is a buy the news kind of scenario. But I was selling the fact because I'm not eating this 89k ADP number. That's bullshit.
Okay. Alrighty. Thank you, Thomas.
It's bullshit. Anyway, guys, I'm gonna call it a day. Oh, actually, hold on. What's happening? Someone's calling intervention again. No, there's no intervention this time. I'm gonna call it a day. Keep your eye on the data and just read the narrative on the chart. I wish you everyone good luck and see you all tomorrow morning for the morning briefing. Thank you so much.
Thank you, Thomas.
Thank you, Thomas.
Bye.
See you tomorrow.
Thank you, Thomas. Fly.
Bye-bye.
Thank you, Thomas. Thank you, Thomas. Bye.
You're welcome. And those of you who would like to join the Alpha community, check the YouTube chat or below the video. 50% discount to join and live trade with me every single day. And yeah, make the money, take the money. Thank you guys. This is the Alpha Facts.